Here from Share Navigator with a stock market update on April the 24th. So first of all, we're looking at the chart of the S&P 500. So earlier in the week, we had mentioned that we had felt, with both indicators, RSI indicators being oversold, that a bounce was likely. Well, we're getting our bounce now. It's up 1.2%. But you can see here, it's important to note that as it stands right now, and it can always change, we're still in this down channel. So if we were to kind of draw a rolling channel here, that, the stock market, when it's giving off gains, it doesn't go down in a straight line, and there's periods of momentum to the upside. But overall, it's still in that downward channel. And if you look back here over time, this is last October or last July into October when the market sold off 11%. We had an initial down period, a bit of a recovery, bit of consolidation, next down period, a bit of a recovery, next down period, and then it recovered from there. So we really only have had one kind of round of that at this moment in time. It's not to say it's going to continue like it did last year, but before anyone declares victory and says that this downtrend is over, it's not. It's still in this short-term downtrend. So now what I want to mention is the short futures options that we sold last week, as regards as a link to our short futures trade. So it's only for those people who sold that. When the 5-day RSI gets to 70, I'm actually going to close that trade out for a profit, take that off the table. So that's the short options trade, the short put futures options trade. When RSI gets to 70 here on the S&P 500, we're going to take that trade off the table, take the profit off, which will basically just leave our short futures trade then. And the idea of that is that when it actually rolls back down again, we'll be able to sell that put again and actually sell it for more money, and just try and roll that as so. We sell it on the big down days and we buy it back on the big up days. And that's what we're going to do. So I'm just waiting here on RSI to get to 70, and we will close that part of that trade down for a profit. I wouldn't go long in the market now. Big week this week, so earnings. Tesla had blowout earnings last night. Well, sorry, not blowout earnings. They actually missed expectations, but whatever Elon Musk said, that the market liked it, and it was up 13% after hours. But I want to show you where it's up 13% from. So if you were actually to look at it here, it actually was down as low as 140. So 13% and 140 is 153. It's kind of only getting back up to here. It's still in this down channel. And at the end of the day, EV manufacturers are under massive, massive pressure from cheaper competition from China, and also from lowering demand. As the infrastructure in certain countries isn't up to scratch, people have kind of gone off the idea of buying EVs. And then I read a report in Europe out about Europe yesterday about EV makers that saying that there's no hope of them achieving their targets by 2035. So when diesel and petrol engines were supposed to be basically defunct, they were basically saying that's not going to happen. Not at the current rate. So they reckon EV prices would have to halve in order for that to happen, and governments need to get serious about it. So I would imagine EVs are going to be under a lot of pressure. Manufacturers, based on all of that information that we're having. So I'm not sure. I think it could be a false down for Tesla and myself, and I think we could resume that downtrend. Now, if Tesla got to around 120 and all that, I think that would be a different story. But you might get a relief rally off this earnings report. It was up 10-13% after hours. But to me, I would use that to sell into it, actually, rather than buy into it. But we've got Meta, Microsoft and Google over the next 2 nights. And as I said earlier on the week, that could move the markets as well. So just back to the S&P 500, that might give it another boost up. We'll have to wait and see. And then, of course, we've got that inflation data out on Friday, which will be important. Just moving on, you can see our active trader watch list there. We've only one active trade left, so we've done quite well. We put 3 on last week. We've closed out 2 at profits, so both made profits over 1%, which is great. And the last one, Gemini there, that's almost break even now at this stage. The RSI hasn't quite got to 70 on that. So you can see that our watch list, though, is down to like 5 companies, and most of them have broken up as well. You can see Netflix, Live Nation, etc. They're all giving buy signals there at this moment in time. Oracle was another one. Workday, Las Vegas Sands has just given a buy signal after poor earnings last week. Um, so, we're not going to trade these. We're not going to add to that. But you can see that this was a watch list of about 25. It's down to 5 now, where the RSIs, the 5-day RSIs was below 20. So as I said, but because my belief is that the market isn't finished its correction just yet, I'm not going to put those trades on. And you can see we've only got the Cap Gemini one left. So once we close that out, we will wait till whatever time we feel that the market has completed its downturn, and then we'll move on. Another thing to be aware of as well, in the long-term buy list, we've added 2 more stocks in here. Intel has gone in. So you can see there, when Intel was at 44, 45, we were kind of saying sell it, get out of it. It went up as far as 52, I think. It's now back down to 34. Earnings tonight. So I wouldn't buy anything before earnings. Wait for the earnings to come out. It could be worse than expected, but once earnings is out of the way, Intel now represents 26% upside from here. So I would wait until earnings. And then the other one is post earnings. I think you could start your positions now as Las Vegas Sands. There's over 30% upside in that, and you can certainly go in and buy into that and start building your position in that when the time is right. You might want to wait again. Remember, this long-term buy list it's really, when we feel that the current pullback is out of the way and is over, then this is our shopping list basically, and so we're just building up our shopping list all the time now, and Las Vegas Sands has been added to that at this moment in time. Just moving on to bond yields here, guys. Just interestingly enough, yesterday, this is very interesting. As I said yesterday, there was positive news out of the Eurozone economic data. And at the moment, when I kind of released that to you guys, the needle hadn't really moved on the euro dollar, but I said it kind of did indicate that the dollar should weaken from here, because the likelihood of the ECB cutting rates gets diminished as the economic data gets stronger. And there was strong economic data out of Germany yesterday. And for me, when you add that into the fact that there was a couple of finance ministers last week trying to really roll back on the whole expectation of rate cuts in the ECB, to me, it mightn't be a done deal now that the ECB actually go and make 3 rate cuts this year. So will they even cut it in June? And it's kind of up in the air. And that kind of, the dollar did weaken out to 107 off the back of that. It's a bit stronger today. But that's something to watch. And I do think people who are holding US dollar cash in their accounts, unless if they're Eurozone based, I think they should convert it back to euros. If you're not Eurozone based, disregard. It's nothing. It's not a problem for you guys at all. And then the 10-year bond actually retreated a bit over the last few days, and it's back over 4.6%. And I think this will ultimately be the reason why equities might resume that downtrend. I think this right now, let's say the Middle East is calm for now in terms of the hostilities between Israel and Iran, but I do think this is a problem for the market. And I think if that starts jumping higher, you're going to see a resumption of that downtrend. And of course, Friday will be very important with the inflation data on that. So still not ready to jump into TLT yet. Just hold off on that trade for now. Moving on then to our energy plays. Natural gas remains now above its 50-day moving average, which is good. It's making these higher highs at the minute, crawling its way all the way back up to this 2 level. I think once 2 gets breached, or if it gets breached, we certainly bridge this gap here, which will be 227, and possibly up as high as 250 here to that 200-day moving average. It's a slow grind, but we're in that one for the longer term. And crude oil is making a bit of a recovery. So we said yesterday, consolidating above the moving averages, and now it's moving higher again. So that would be very good for energy stocks. And also not so good for inflation, so remember that as well. And then finally, just onto the metals, silver, a bit of consolidation after the big sell-off yesterday, similar with copper. consolidation here. I'd still sell into this strength at this moment in time, and gold I would just hold as an inflation hedge. So just in summary here, the S&P 500, just to be clear, when this RSI gets to 70, the short put futures options that we sold, only for people who sold them, I'm going to take mine off when the RSI gets to 70 in the short one here. I'm going to lock in the profit on that. And then I'm going to leave on my short futures trade on its own, the ones that expire in June, the futures themselves. And the idea is that if this makes a rollover and makes a new low, then I'll be able to do one of two things. I'll be able to close out my short futures then at a profit if I want, or I can sell another put option on those futures if I want. So, and I'll get more premium in than what I'm paying now to buy them back. So I'm going to do that when the RSI gets to 70, and I'll make an alert when we do so. Big movers this week for the market, which could change this story. So please note, we might get blowout numbers from the three mega caps that are reporting tonight and tomorrow. And then, of course, the inflation data on Friday could change the needle on that. I'll keep you updated if there is a needle change. But right now, that's the game plan. Okay, this is Stephen with a stock market update. Thanks and bye for now.